What is up, everyone? This is Dre Trades, and yes, this is another Nio video. I'm going to give you a quick update. I'm going to try to make this video as quick as possible, talking about Nio, since I put out the video that this stock is going down for the most part. I totally want to be careful that the drawdowns are about 30%. I said it in the video. I will put that link up above, but let's talk about it real quick because there's some interesting things happening, especially starting yesterday. So in the other video, I talked about the drawdowns. I'm going to do it again. You know, this drawdown right here was 37%. All right, this one right here, I'm just measuring it, 28%. This one right here, that was not bad. It was sideways. I actually like that movement. This one right here, we're talking 14%. This one, from up here to down here, we are talking 25%. And this one to where the low yesterday, okay, the low yesterday, 31%. So let me clear those out real quick. So you can basically get an idea of how this stock likes to drop. And for the most part, an average, I don't know, 25% or so. So we dropped 30%. We're down 30% from the top of the market. What day was this? November 24th was the top. So we're down, let me measure that again. I want to be precise here. We went down 33.71% from the top of the market on November 24th. All right, so let's dive into the 5-minute chart. Let's go to the 5-minute chart. And yesterday, I didn't even notice this yesterday, but man, basically we opened down, what, 15% yesterday? Incredible. I probably would have been in there buying that too. I had no idea. Well, anyway, they bought it up. Look at that. Let me zoom in here. Right, they bought, as soon as it opened, for the most part, they bought it up. They closed that gap quick. I mean, this gap was closed at 10:30. Within an hour, that 15% gap was closed. That alone is pretty bullish. All right, there is definitely buyers in the zone. All right, and the good news is, if I were to draw a line from that gap, we're right there. We're right where, for the most part, where we closed today. We can see how we was bouncing off that level today for the most part. We bounced here right around 1025, 10 magical number, 1025, and we closed right on it. So maybe, just maybe, these levels will hold, even though it was kind of ugly day. It was down 5.48% today. You know, this is definitely your bogey right here. I mean, if for some reason it closed below there, but man, that's a long ways down. Right, that's a long ways down. That is 14% down. So be careful if you want to get out there. All right, so the interesting thing is, you guys watch CNBC, the Najarian brothers, how they do the unusual options activity. All right, so there's some news on that there's some unusual options activity, December 24th, the 50 calls. And Najarian will hold this position for about 2 to 3 weeks. That's what he likes to say. So let's go ahead and check out those November 24th calls. Check them out. December 24th, I'm sorry. He said the 50. And you could see here the 50. And look at that. It's 25,000 calls were traded. Now, here's the thing with those guys. And here's the whole thing with unusual options activity. I'm not necessarily a big fan of it. Yes, sometimes they're right. You know what? Sometimes they're wrong too. They won't talk about those. All right. For every option bought, there's an option sold. All right. We don't know why these options were bought or sold, but a lot of times it's not just somebody just throwing out a bet because they know something. If they kind of did know something, it would be illegal. They got information that no one else has. Basically, what I'm saying, a lot of these company institutions and big hedge funds, they hedge their positions with options. So most likely when you see numbers like this, it's a hedge against something else. We don't know if they short the stock. We don't know if they bought the stock and then they sold the options or buy the options, you know. So basically the 25,000 options. It's not all against that one. The one trader, I forgot what they said it was, the volume in the one trader. But most likely, in my opinion, that he has another position, right, in the stock or whatever, and it's kind of a hedge adjusting the deltas of the position. That's how I look at it. Now, once they announced that, the stock even closed even lower. I think they announced that the stock was down 1%, 1.5% or something like that. Well, the stock closed down 5%. I'm just saying, okay? I'm just saying it could be a big pop. You know, sometimes these guys is right, but there's a lot of times these guys is wrong, but they don't say anything about it. So, but it's interesting. 25,000 shares traded, and that's 21 days from now, and that's at the 50. All right, so let's go to the daily. Let's go to the daily. Pull up the daily chart. Kind of zoom in there, and the 50 is right here. All right, so there's your 50. Now I'm going to clear all these out. I actually want to draw that again. All right, so what I like about the technicals is you saw how they bought it up when it went down to the 40, and that was right at, for the most part, support, right? And it totally bounced hard, closed the gap, went back up, right? So maybe that is a move towards higher levels and to the upside. We already had the 30% drop, right? We had a nice bounce off support. These guys are saying, you know, hey, a lot of option activity. Let's go ahead and give them the benefit of the doubt what they're saying. He's in the calls. And you know what? I placed a trade too. I didn't get into the calls. I actually sold the 40s and bought the 38s for about 60 cents. 60 cents. And so basically that's $2 wide. I'm doing the math in my head. I have my risk is $140 for $60. So that basically $60 divided by 140 is 42%. I did that 3 times. So I'm trying to make 42% on 140 times 3 on $420. You know, so I'm trying to play it safe. I'll probably hold those for a while. I mean, the most I could lose is 420. All right, that's not too bad. Anyway, and I'll take that 42% or whatever I said. I don't forgot what the number was. If it closes, basically I'm gonna watch it, and that's right at the support line, right? $40. I'm just gonna call it 40. So I'll just go ahead and watch it. If the thing starts to rocket ahead, I'll probably be getting out of this trade with a profit pretty quick. So that's how I played it. I decided to play it not based on what they were saying with the unusual options activity. I decided to play it because of the bounce off the support, and when you look at the 5-minute, how rapidly that was bought up to close that gap and even higher, right? So that might have been that exhaustion sell, right? Just like a capitulation. That's what they call it, capitulation, and it's bought back up, right? It even though it was down 5%, it's already 19% higher from the low, which was $38 roughly, to where it is now, $45. So that's not a bad move. That's not a bad move off the bottom. So let's kind of look at this. Let's just see if it could bounce. Now, I'm just talking about the bounce and to see if this thing goes higher. That's why I sold a put. I'm actually a put spread. I'm not saying anything about how high it can go. We're not going to the moon. You know, I don't know. But all I know is it bounced. For all I care with my trade, this thing could just chop around sideways and I'm going to be a winner. All right. And that's why I like selling puts. I don't necessarily, if you bought a call here and the calls are very expensive, you better be right pretty quick because you're going to be losing money every day. Matter of fact, let's go ahead and just look at the theta real quick on that. Got the delta. Come over here and look at the theta. Now the theta is how much option, it's how much it's losing, right? Every day. The theta burn, that's what I call it. How much the value of them options are losing every day. There it is. I couldn't find it. All right, so those 50s, it's losing $12 a day, and every day that number goes higher. So $12 today, Tomorrow might be 14, the next day might be 16, the next day might be 20, then the next day might be 22, then the next day might be 25, the next day might be 27, and that's how it kind of works, right? All the way until those options go to zero. All right, so and they will go to zero if Nio doesn't reach 50 by December 24th in 21 days. My option will be doing the same thing, but since I sold it, I'll be making the money, right? I want it to go to zero. So that's the trade I put on. I put it on my other account. So I sold the 40s and bought the 38s. I'll give you an update on that to see. I'm going to try to get out half, right? I want to try to get out as quick as possible. I don't really, the implied volatility is through the roof, right? So I figures, you know what? That's a good time to sell. If you look at the implied volatility, 123%. On these particular options right here. And here's those involved. Look at that. Look at that, December 24th, 123. Okay, so anyway, that's it. That's what I wanted to talk about. I hope you guys understood it. I'm tired of the Nio videos. I'm gonna actually do a quick video on that as well. So thanks for watching. Hey, like, subscribe. If you have any questions, I kind of went over this kind of quick, right? Just put it in the comments below and I'll go ahead and give you an answer. And I hope you liked it. And hey, if you're trading this, I hope you're making money, regardless if it's going up or down, if you bought options, sold options, whatever. I hope you're making money because that's what it's all about. Thanks for watching, everybody. This is Dre Trades. I'm out. Peace.